Morning, Richard. Welcome back to Blue Notes.
Thanks.
You're now formally appointed as ANZ's Chief Economist, so obviously in recent periods you've been looking around more broadly at economies across the region. So how do you see our regional economies, Asia, New Zealand and Australia?
Look, I think there's a lot of good news to talk about actually. I mean, Asia's been struggling with an export slowdown and kind of tighter dollar liquidity the past few years, and exports, while they've got some challenges, look a bit more stable. And the Fed's going to go a bit more slowly. We think China obviously has some major structural tectonic shifts which it's undergoing, but the growth slowdown that comes out of that should probably be elongated rather than kind of this abrupt crisis-like outcome. India, in fact, looks like it's a pretty good story actually, and I think rather than talking about India as a land kind of with potential, it seems to be finally delivering into that. And Australia and New Zealand are coping with the ends of a commodity price boom in the rural sector in New Zealand and the mining sector in Australia, and are facing some kind of policy challenges because of excessively low inflation. And in fact, that inflation piece, those policy challenges are quite common across the region actually. Central banks kind of in the southern part of the region trying to cope with currencies which are kind of peskily strong and inflation that's too low. And in Asia they're a bit worried about currency appreciation because capital's coming back to the region.
It's interesting what you say about China and India. If we take them one by one, China obviously it causes a lot of anxiety about how that transition is going to take place. We've heard talk of a sort of trade flow recession in Asia. How are those implications with China playing out more broadly?
Yeah, so the shift we've seen in Asian trade the last 3 or 4 years, weaker kind of major economies definitely part of it. A restructuring in China is definitely part of it. So China no longer is kind of a produce at all costs kind of mentality. Because their costs are not that low anymore. Standards of living have risen, but also the type of growth they've had in the past, both domestically and through exports, has been pretty intensive in terms of the environment, in terms of kind of usage of domestic credit and domestic capital. So that shift is also encouraging a shift in Asia away from China as kind of a supply chain story towards China as kind of an end demander.
Surprisingly, you're quite positive about India. As you say, India has long been a country viewed as having a lot of potential, but you're seeing it now moved on one more step.
Look, we've got kind of a clear succession in the political sphere with a new government which actually has been more reformist than the last government, and we've got a clear kind of pattern of succession now in the central bank, kind of with this credible kind of technocrat style central bank governor. India's great headwinds historically have been twofold. One is very high dependence on imported energy, but of course the shale oil boom in the US has meant structurally the cost of energy is a lot lower. And secondly, an absence of a manufacturing base and a reliance on services, whereas of course the trade cycle in the last couple of years has shifted away from trade and manufacturing towards trade and services. So actually I think India looks like it's in a pretty sweet spot.
Well, given that broad picture that you've talked about, a positive India story, transition in China, Australia and New Zealand facing some challenges with transition and with currencies, is there a sort of central message you could give to business trying to engage with the region that flows from that picture?
Yeah, look, I think Asia, both in Asia, Australia and New Zealand, actually, the message from business I think has changed synchronously the last couple of years. They're much more concerned about sustainable growth. It's not about growth at all costs, I think, but concerns about credit availability and the stock of credit in the region. But what I'd say is actually I think policy's adjusted to that. So policy's much easier. And in Asia particularly, I think the region's handled kind of the retraction in credit remarkably well the last couple of years, and I think that stands kind of business in good stead if they're looking at the region as an expansion opportunity.
You were born in Asia and you've spent a lot of your working life, in different parts of Asia. When you look over that period, you're a young guy, so it's not all that far back, but when you look over that period, do you see Asia more capable now of avoiding those deep shocks?
Look, it's unquestionably more capable. Currencies are flexible. The Asian crisis is the worst example of, I guess, how not to manage volatile capital flows. We're an environment of largely fixed exchange rates, so the flexibility in exchange rates is important, even though occasionally they're kind of a pest. They're kind of a pest to policymakers. And Asian domestic financial markets are much more mature. If you look at other emerging markets, Brazil is a great example. As the local currency has depreciated, domestic liquidity has contracted and interest rates have gone up. So that Brazil hasn't got any net benefit from currency depreciation. If you look at Asia, even in the economies that have been buffeted by some, a bit of stress the last couple of years, Indonesia and Malaysia, for instance, as the currency's depreciated, local interest rates have gone down. So there's clearly been a net stimulatory effect there, and I think structurally Asia looks in about the best shape we've seen.
Well, look, thanks very much for joining us again on Blue Notes, Richard, and good luck with the new role as
Thanks,
Chief
Andrew.
Economist.